Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Yeah, let's read this headline. Blackstone-backed Antara is liquidating as founder plans departure. Blackstone-backed Antara Capital is pursuing a wind down with plans to liquidate its remaining investments, according to people with knowledge of the matter. The liquidation is underway as founder Himanshu Gulati prepares to leave for a separate fund, said the people, who asked not to be named, discussing private information. Gulati is joining London-based Marshall Wace, which manages more than $69 billion, Bloomberg previously reported. Hedge fund Antara sees founder jump ship after freezing assets. Antara Capital founder Himanshu Gulati is leaving the struggling hedge fund to join Marshall Wace, according to people with knowledge of the matter. The move comes a little over a year after Antara was forced to freeze hard-to-sell assets from redemptions as losses piled up. Good riddance, piece of shit. Guys, go read the article titled "Hedge Fund That Shorted AMC is Now Liquidating" by Frank Nez. Give him a follow. With approximately $2.8 billion in assets under management at its peak and a small exclusive client base of just 10 investors, the fund aimed to capitalize on complex, high-stakes strategies. However, its aggressive tactics and risky bets led to mounting losses and liquidity issues, culminating in its decision to liquidate today. The unraveling began over a year ago when Antara was forced to freeze redemptions on hard-to-sell assets as losses piled up, a move that signaled deep financial distress. One of Antara Capital's most high-profile moves was its massive short position against AMC, disclosed in 2023. Maybe you've heard it, maybe you haven't, but back in the day they used to always say, sell in May and go away. Historically, the stock market tends to have a slight negative or neutral performance in May, but the sell in May and go away adage is not always accurate. While May has not been a historically strong month for stocks, the S&P 500 has finished higher 61% of the time since 1950, according to LPL Financial. Many analyses suggest that the May-October period yields lower returns compared to November to April. Well, I say, ask me again after the Fed meeting this week, because we've already learned that with Donald Trump in the White House, the anti-politician, anything and everything can happen. Uncle Frank's call, volatility remains on the table. So I'm a position trader as opposed to a day trader. I'm always looking out for trends and reversals. That means I have to know what's going to happen next that can influence the markets. Since the meme stock phenomenon, I'm also looking for potential black and white swan events, the hardest thing of all to predict, but I can operate on the assumption that these events can and often are launched by surprise results stemming from economic events and developments, not just geopolitical ones. The 2008 financial crisis, for example, was primarily triggered by a combination of factors, including the bursting of the U.S. housing bubble, the widespread issuance of subprime mortgages, and lax lending practices. These issues led to the collapse of mortgage-backed securities, a surge in defaults, and ultimately, a global financial crisis. Many of us believe Wall Street was mainly responsible for 2008. Those institutions and investment banks blended, packaged, and sold mortgage-backed securities to investors, effectively transferring the risk of these mortgages to others. Also in 2008, U.S. regulators banned the short selling of financial stocks, fearing that the practice was helping to drive the steep drop in stock prices during the crisis. Since then, I'm careful to watch for such bans because it indicates regulators are out of ideas and desperate to stop the contagion. It's important to note our new SEC chair doesn't think these bans are effective at all. On Monday, May 5th at 9:45 a.m., we'll see S&P final U.S. Services PMI for April. Then after the bell, Q1 25 earnings for Palantir at 4:05 p.m. Tuesday, May 6, 8:30, U.S. trade deficit for March. On Wednesday, it's all about Wednesday, May 7th, you gold bugs should watch Barrick Q1 25 earnings at 6 a.m. in the morning. I'm giving you a hint here. Listen to the forward-looking remarks. You guys don't listen to anyone else, so listen to the guys that actually mine the metal. You might get some insights as to what's next. Then at 2 p.m., we get the FOMC rate decision. The current market odds for the Fed cutting interest rates at this meeting are low, with futures traders pricing in only a 34% chance of a cut, according to the CME Fed Watch tool. While markets anticipate a more aggressive series of cuts later in the year, the immediate outlook for a May cut is uncertain, with the Fed chair stating that the central bank is in no rush to cut rates. I say he should cut a quarter right now. 2:30 p.m., Fed Chair Powell gives his press conference, and then at 3, we'll see consumer credit for March. Okay, so that's Wednesday. Now, after the close, I'm going to watch Joby earnings to see if I can't get any hints on Archer. That's at 4:05 p.m. Then AMC earnings for Q1 25 at 4:15 p.m. I'm growing concerned about that call because Adam loves to spend on CapEx to keep earnings muted. And Cinemark just swung to a first quarter loss, blaming a suppressed box office environment. Then it hit a new 52-week low this past Wednesday, but they beat on revenue and look to be recovering. Hey, they're still up 23.5% for the month, so their CEO, Sean Gamble, is doing his job because he works for the shareholders and not for Wall Street. Thursday, May 8th. First, I'm going to be watching D-Wave. They'll report Q1 25 earnings at 7 a.m. Eastern Time. All the quantums are cousins, so these results may impact them all. Then at 8:30, initial jobless claims and U.S. productivity for Q1, followed by wholesale inventories for March at 10. Now, one thing I'd like to point out about Friday, May 9th, is 6 Fed members will be speaking that day. Be ready for some inflation, employment, and tariff comments in the wake of the rate decision. If he doesn't cut, these speeches will be very, very important. If he does cut, no one will care what they say. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.